Alright everyone, and welcome back to the channel for another Bitcoin update. So in today's episode we're going to talk about the imminent danger that is coming in with Bitcoin. Bitcoin is about to break below this last line in the sand that I talked about in yesterday's video. Now I really wanted to call today's video a failed move equals a fast move in the opposite direction, like I always do, but we used that title yesterday, so we move. Let's jump right into today's video. So like I've been saying for a while, I do not think the bottom is in for Bitcoin. There are a plethora of signals showing us that we are still bearish and the market structure is absolutely unchanged. Let's go through a few of them. So let's remove all the drawings. Let's take it back to basics. Let's look at the EMA ribbons. What have we done? In fact, what have we been doing on Bitcoin since 42,600? Well, we've been trapped beneath the daily EMA ribbons. You can see you come into the daily EMA ribbons, solidify a rejection. What do you do here? You've got a high breakdown, come into the EMA ribbons, breakdown, and this was obviously a lower high. So breakdown, lower high, breakdown, lower high, breakdown, lower high, breakdown. We actually came into these, twice. So in the immediate short term, we are still technically in an uptrend. But nonetheless, when in doubt, zoom out. You are still in a massive downtrend. You're stuck beneath the daily EMA ribbons. And we're running out of areas for Bitcoin to hold a support. There are almost, in my opinion, there's only like two other places that we can even humor holding in the immediate short term to even say that you're still bullish. So with that being said, let's draw a couple of our other fibs. So from our most recent high to our low, where have we come up to? We've come up to the 0.5 Fibonacci and we've broken to the downside. Now, I imagine there's going to be a few bulls that are going to, shackle me if I don't mention this. So we do technically have a confirmed W breakout. We've not come back and back tested this. However, this was confirmed with a volume confirmed breakout, but we haven't had a throwback to this level. So I imagine a lot of people would be looking at something like this for a retest of 21,800 before the next leg to the upside. I'm in disagreement with that. You can also see the heart line would be coming down in the next 24 hours at 21,800 as well. So would be a convenient place to come back down and backtest. If you did also backtest this and start to proceed to the upside, you would also have a market structure which is like lows, highs, low, high lows, higher highs, higher lows, higher highs, higher lows, and higher highs. I think a lot of people are going to be looking at something like this, but nonetheless, I myself do not think this is going to be coming into fruition. On the daily time frame, Heikonashis have yet to switch back bearish. However, the weekly Heikonashis have been absolutely pushed right back down. You can see we started this breakup and we've basically had about half of the move snatched away from us already. So Bitcoin is looking extremely weak right now, and I'm going to make a separate video about this soon, but I have been looking at on-chain metrics, looking at what the retail money is doing, looking at what the whales are doing. Whales are not buying, they are selling. I've been telling you this for a while. Follow the smart money. Smart money is selling onto your head right now, and retail money is saying, the price cycle bottom is in, the bottom is in. No, I don't think I don't think so. Once again, don't have a crystal ball, but nonetheless, too many retail traders are saying the bottom is in right now. Too many people are FOMOing in. Fear and greed index went from extreme fear to absolutely crazy levels in just 24 to 48 hours. I think all signs point for one last capitulation to the downside. The Fed has not yet pivoted. On the 27th, we're going to find out what the Fed's doing. So on Wednesday, we'll find out what the Fed's doing. Are they backpedaling? I don't think so. That could be priced into the market. I'm not saying it's not priced into the market. I personally don't really think at this price, at this moment in time, that the FOMC update or the FOMC interest rate hike would be priced in. But nonetheless, forget about the FOMC. Doesn't matter. What's happening on the 28th? We've got GDP coming out. If we've got negative GDP, we're going to be in a confirmed recession. That is going to absolutely clot the price of Bitcoin back down to the downside. And you're going to very, very soon find out that 17,600 was not the bottom, as we do come down for one last flush out. In my opinion, as soon as Bitcoin breaks below that 17,000 region, I'm going to come back and ape into the market. Now, this does not mean I haven't already been aping into the market. I think people know who have been watching my channel. I've been saying at 25k, I said I don't think the bottom is in. I think we're going down to lower prices, but I'm going to be buying in $1,000 increments. So I've been buying at, I had buy orders at 25, 24, 23, 22, 21, 20, 19, 18, and 17 didn't get hit because we came down to 17,600. So we didn't quite hit my buy order at 17, but I still have these buy orders down here. They haven't changed, and in fact I've actually added to these buy orders because I do think we're coming all the way down to 17. I think we're coming to 16. The longer and longer we take, the more I am suspicious about 14k being on the table. But nonetheless, I really want to go ape as we break below 17,000, 16,000. That is when I plan on heavily jumping back into the markets. If we look at the lower time frames for the Heikonashis, you can see we are solidifying an M pattern right now. We came up, broke down, had a minor uptrend on the 4-hourly Heikonashis, made a lower high. Now we're breaking down with a M pattern breakdown. If we do switch back over to the Japanese candlesticks so we can see this one a little bit better, I would draw it like this. Target from the high all the way back down to the low. Breakout should be taking you down to 20,837. Now, if I move that back over, daily time frame, VPVR, anything else going on down these regions, what do you know? There's a massive volume profile down here at 20,800. So in the immediate short term, I don't think we're ready to capitulate back beneath this bear flag. But what I do think is before the FOMC meeting, I think we're probably going to capitulate into it. Like I said, the only time you have to be bullish over on Bitcoin is in the immediate short term until that FOMC meeting. If we do not break out before that FOMC meeting, you can kiss your chances of having that bullish break goodbye. I think it's now or never. We've got literally, what is it, 6 days, 5 days now? We've got 5 days until the next FOMC meeting. If we're not breaking out to, our higher ranges on the VPVR, like 28,500 in the immediate short term, then it's not going to happen. I don't think it's going to happen immediately after the FOMC. So subsequently, immediate short term for Bitcoin, we're going to head back down to this range. I probably think we're going to lollygag, and then we're going to break down to lower price targets. Now, why did I say I want to call this video failed move equals a fast move in the opposite direction? Well, if you're a veteran on my channel, you would have heard me say this saying many, many, many times. And, once again, we said this down here. I did not want to flip bullish, but nonetheless, this is what the charts told me in the immediate short term. And I always say this. So once again, back here around about the 12th or 13th of July, I said I have to switch bullish in the immediate short term because when you have these failed moves, they almost always correlate to a fast move in the opposite direction. What did we do? Whether we're looking at the top of this or not, whether we were initially drawing this as a bearish pennant, which was what I was looking at, we had a failed move beneath this support, and that failed move did equals a massive fast move in the opposite direction. So we had to elongate the trend. We looked at this in a different way. We're still in a bear flag. What did we do from there? We broke out to the upside of this bear flag. We had a failed move, and right now we're solidifying that fast move in the opposite direction. We literally have about 24 hours to decide, in my opinion, what is going to be happening. The absolute floor of this trend is at this wick down here. If we break below 22,400 in the immediate short term, you can kiss the chance of a bullish breakout goodbye. It is going to be gone, in my opinion. There is no other levels that we need to hold other than here. Once again, there are many things this correlates to. This correlates to, the top of this bear flag. This correlates to the breakout of this W pattern. There's a lot of things that this needs to line up with. And, technically speaking, you can actually draw... No, you would draw the... The most conservative way to draw this W pattern would actually be down here at 21,780. So in the immediate short term, once again, you can also add this as your potential last line in the sand. I imagine this will probably be backed up by your 0.5 Fibonacci, 21,600. Nonetheless, I wouldn't be banking on it. I don't think it's going to come into play. I think we're going to slide through this like butter because this bear flag, this huge bear flag that we failed to move out of, is far more important than anything else on the chart right now. So with all that being said, clearing up the chart, once again, you've fallen to the downside of the bear flag. You've had a failed move equals a fast move in the opposite direction. You're basically getting a confirmed rejection from the top of the daily EMA ribbons. You failed to clear this area on the VPVR, and subsequently you are being sucked back down to the next point of control, back down here at 20,800 in the immediate short term. In the even more immediate short term, you've got price targets from M pattern breakdowns. This would be meaning, hey, if we fall below 22,000, or technically it'd be slightly different on here because you'd want to see the breakdown here first. So Breakdown of 22,400, you're going to witness a drop all the way down to 20,800, and then as that comes into fruition, you're only going to have a couple of days after to lollygag to the side before the FOMC, before the GDP. In my opinion, this is going to absolutely slap the markets back down. If we quickly look at the oscillators, the daily for the squeeze bomb, we're not even looking at this on the Heikin-Ashi, but you know, if we do look at this on the Heikin-Ashi, this takes away some of the noise and tells us a lot later, after we've initiated a downtrend, that the downtrend is starting to come into play. And the downtrend is in play even if we're looking at the Heikin-Ashis, which is not a good sign if you are a bull right now. The MFI, switching back to the Japanese candlesticks, MFI actually on the Heikin-Ashis barely started to turn down because we are still in the green. The same with the MACD as well. You know, Heikin-Ashis really smooths this out to make sure we're not jumping the gun on this. But either way, the money flow index literally came up to 80. The last time it was this overextended, we made a separate video about this, but this was all the way up here at 48, 49,000. So it makes sense to me that the price should be falling back down to the downside. And even on the Heikin-Ashis, I think we're literally sitting right beneath this trend line right now. Yeah, even on the Heikin-Ashis, we're beneath the trend line. So we're looking extremely weak on every single possible metric. Squeeze momentum heading down. MACD getting bearish momentum coming in on the histogram as we do massively run up. I think the next leg down is going to be very brutal. Money flow indicator heavily overextended. The Nasdaq came up to this resistance line that we previously talked about, and what do you know? The market structure for the Nasdaq is completely unchanged. You know, you've got all-time high, low, lower high, lower low, lower high, lower low. This was a double top. Lower high, lower low there, lower high here, lower low. This probably looks like it's going to be another lower high. Potentially, we could move back up. Because, you know, once again, you know, there is potentially a little bit of room for momentum to the upside over on the stock market, especially the tech stocks. They've got a little bit of room to the upside, but nonetheless, Bitcoin with this failed move is not looking too pretty right now. Nasdaq looks like it wants to come down in the immediate short term. Nasdaq is still pretty weak, in my opinion, on the mid to higher time frames. And like I've been saying, for the total crypto market cap, I think something like this is in play. I mean, what we're witnessing right now looks like a classic wave 4. All of the attributes of a wave 4 are perfectly displayed in this. Oh, I meant to draw this from here, because this was really not a wave, in my opinion at least. So this is what we would be working with. You know, you've got your massive run to the upside, and then you're starting your bearish move to the downside. So instead of an ABC correction, as you have finished off with the 5 wave, so from here, you know, you would have had your 1 2 3 4 5 wave finished all the way up here, and because of that, you can even see one of your ABC corrections from the 4 wave over here. You start your new 5 wave impulses to the downside. So you've got your 1 wave impulse, 3 wave impulse, 2 wave correctory wave, 4 wave correctory wave as well. And you know, both of these look very similar. From the low over on total crypto market cap, we bounced up 47%. From the lows over here, we bounced up about 39.5, a little bit under 40%, definitely under 40% for this one. Unless I haven't actually drawn it to the wick. No, I didn't. So it is actually just over / approximately 40%. So these moves, they're very similar in my opinion. And while this does say, you know, hey, we can move a little bit more up to the upside, I might be jumping the gun on this one. We could have another leg back up. Bitcoin could take another leg back to the upside if we do confirm this as support. I personally find it less and less likely the more we look at this chart. But if that is the case, the total cryptocurrency market could still pump up another 5, 6, 7% coming up to our 4 wave before we do inevitably head back down. Like I said in my last video, this is a no trade zone for me. While Bitcoin is making a decision, because I have to emphasize this, while my bias is to the downside, I can't lie to you, the decision has not been made yet. The decision will not be made until Bitcoin breaks below 22,300. That is the bearish break. If we break to the upside and we break bullish, we'd need to see a massive break above 24,300. Until one of those price targets comes into play, until Bitcoin breaks above or below one of those areas, we can't say for sure whether we are going to continue to head to the upside or the downside. We can only speculate looking at previous data, looking at other momentum indicators, and just tying in all of these things into one neat bow and saying, hey, this is what we think is going to be going on. This is what I think is going to be going on. I think stock market, NASDAQ, tech stocks are getting ready for the next leg to the downside. The dollar is probably going to react very, very strongly to the upcoming FOMC meeting. GDP, that's definitely going to be a different story. I think we could wipe out a lot of gains in all of the markets if GDP comes in negative. Once again, I think it's very, very black and white right now that for the total cryptocurrency market cap, we're bearish. Nothing's changed, you know. And if we look at the basic market structure for Bitcoin, I said over to the weekly time frame, this is probably the strongest technical that I can give you, and it is literally the simplest one that we can possibly draw from. So look at this, all-time high, right? Breakdown, you've got a new low, bounce back up, you've got a lower high, break back down, lower low, break up, lower high, break down, lower low, break up, lower high, break down, lower low, break up, lower high. What do you think is going to come in next? The trend is your friend until the end. I think the trajectory is absolutely unchanged. And as you can see, you know, in the immediate short term, you would at least want to get back above the previous low. Like that is the absolute minimum that you would want to do. And that would not necessarily mean the bottom's not in, just like when you had a low down here and you had a breakdown low, high, low, high, low. You could have said, you know, hey, we're breaking back above this low, we're bullish, right? No, this was a lower high, broke back down from here. So even in the immediate short term, if Bitcoin manages to do something like this, you know, we could go up to these targets again. We could come up to 28.5, which is where the VPVR is. We could come up to 29.30. But if we do, and it's a lower high, we're very, very likely to get clotted back down to the downside. The market structure is absolutely unchanged, my friends. I'm not saying for 100% that the bottom is not in. I am just saying, going with the trend, looking at everything that's going on in the economy right now, I think it'd be a little bit too simple to say, hey, pi cycle bottom's flashed, time to be bullish, right? I just don't necessarily think so. That's my opinion. You can agree with me, disagree with me. Let me know what you think down below. I'm definitely not opposed to hearing opposing opinions to myself. I just think, looking at all the data that I can pull from, looking at the volume was never really there to confirm the breakout. You know, we had a failed move above this equals a fast move in the opposite direction. Volume is now coming in for the bears, especially on the lower time frames. We're getting a decent amount of volume coming in. VPVR zones, we're being attracted to the next point of control, which is the downside. EMA ribbons, you got rejected from these. On the daily time frame, 4 hourly Heikonashis panning out into an M pattern. Daily Heikonashis look like they're going to be flipping bearish very, very soon. Momentum indicators, they're all either overextended or need a pullback to the downside, especially things like your money flow index, which are basically your RSI, which also account for volume. NASDAQ coming up into a strong area of resistance as it does break back down to the downside. Total cryptocurrency market looks like it's in a 4-wave and getting ready to break back down. I don't think we've got much else to talk about from here. I would also like to say, even though this isn't in agreement with what I think is going to be going on, you can actually see the stock market has broken out of this downtrend. So that is one thing to take into consideration. If I am wrong on this, the most likely scenario or the most likely TA that I would have missed or neglected from this would be, hey, we could come back to this point of control, we could break back up, or hey, we might even come back down to here. If we have, you know, positive GDP, if the Fed meeting goes all good, stock markets could have a beautiful rebound, and that could be the bottom. But either way, in the immediate short term, I do think we need to come back down to the downside. Right now with the stock market, I think most of the post markets are basically at the exact same price as they are right now. I need to clear the VPVR. I think all the post markets are like literally the exact same. Post market is, yeah, only like 10 cents down on the SPY, not even a % down. And then all these are the same. So right now we can't look at the pre-markets for tomorrow. Once again, they all are more or less the same. they got all over exuberant very, very quickly after the earnings reports. And previously, you can see in a bearish trajectory, a lot of the time you get these earnings reports on the 26th. We broke down into this. We had a very, very quick pump back up. So, I mean, it's not out of the blue. This was a different market scenario. I found the earnings, they don't necessarily correlate too much with what actually goes on in the markets. Being that, you know, you could have negative earnings and a stock could still absolutely skyrocket. So nonetheless, we're getting off topic. We talked about everything we need to talk about in the stock market. Stock market is lower time frames, still bullish. Higher time frames, you're still bearish. Absolutely nothing's changed. We've been through everything we need to talk about now. The only thing is to wait. So pulling this chart back up, daily time frame, switching these back over. Let's go on the daily. You can see, I'd like to reiterate, a decision has not been made until Bitcoin decides, hey, I want to break bearish below 22,300. And on the flip side, we wouldn't have broken bullish until we break above 24,300. In my opinion, we're going to break to the downside very, very soon. And after then, if you are a bull, the only real last line in the sand I see for a bullish breakout is 21,650. But in my opinion, trajectory is going to be to the downside. We have one more low coming in for Bitcoin before the bear market lowers in. That's all I've got for you today, my friends. I think Bitcoin is getting ready to break down. Let me know what you think. And as always, Calway out. Peace.